trying to get private credit and private equity into an ETF wrapper is all the rage. Let's talk about this with Joanna Gallegos. She's the co-founder of BondBlocks, a frequent guest here. They recently launched the BondBlocks Private Credit CLO ETF. We're going to talk about that. And my old friend Todd Sohn, he's here as well. He's the head of ETFs at Strategas. He's our all-around ETF expert. But first, I want to bring you an update on a story we brought you last week. The SPDR SSGA Apollo Public and Private Credit ETF. I know it's a mouthful, but it launched last Thursday. We talked about it. It allowed retail investors to buy into private credit assets. And late on that day, the SEC sent a letter to the company saying there was, quote, significant remaining outstanding issues, close quote, and listed worries centered on the fund's liquidity, its use of the name Apollo in the title, and its ability to comply with valuation rules. State Street did respond Friday night to the SEC, saying they would revise the name of the fund as soon as practicable, presumably removing Apollo's name. They clarified that the fund's illiquid products will not be exclusively tied to Apollo, and that other broker-dealers can provide quotes, and that the fund's NAV or net asset value will be calculated on a daily basis. State Street told CNBC they would have no further comments at this time. Joanna, I want to talk to you about your fund and what's going on with you, but you've had extensive experience filing ETF registrations with the SEC. It's a little unusual for a fund to become effective and then get questions from the SEC after the fact. So is there any sense, and I know this isn't your fund, but any sense of what happened here?
It's unusual. It's not unprecedented. It does happen from time to time. You, as an issuer, if you're an established issuer, you have a 75-day clock from which to work with the SEC, and then you can take your filing effective. Most issuers work with the SEC to satisfy their concerns, because mostly the important thing here is that investors on a follow-on basis know how to conduct due diligence on your fund, understand what your fund's doing, and it's totally clear what's going on in the fund, and your prospectus reflects that. So that's what that process is about. And this is notable, not unprecedented, but it definitely raised some eyebrows last week.
So Todd, I'm going to lean on you a little to educate us about the procedural aspects of this, because most people don't know anything about this. So as Joanna mentioned, typically a fund can become effective, you can start trading after 75 days unless the SEC raises objections. I understand, I saw there were several extensions to this already, but for some reason it was allowed to become effective, and the SEC then raised questions afterwards. And as Joanna said, this was a little unusual. I think
the whole episode.
Just educate about how this works.
The whole episode seems strange. Yeah, if you're an existing issuer, you file a 485A, right? That's for announcing the ETF. What is the strategy of the ETF and any of the key risks involved? You go through the 75-day process. SEC hits all their check marks, check boxes, asks any questions, and then eventually the fund goes effective, and we start trading. For some strange reason, none of the questions were really addressed publicly, and what I find out is why, they mentioned that other counterparties are going to be involved with the fund instead of just Apollo, that Apollo is going to provide 3 bids per day, I think in 15-minute intervals or something like that. Why wasn't any of that brought up in the initial filing? I think that would have cleared a lot of hurdles here and a lot of the confusion too. And so I'm not quite sure why that happened. It just seems like maybe the new administration came in and this fell through the cracks.
Well, maybe that's a possibility. We don't really know. The point is that there's a procedure to this that's pretty well worn. Joanna's been through this many times. You're a veteran doing this, and usually this doesn't come up like this. Like why after?
I think this one gets under the microscope because you're talking about private assets.
Yeah.
I think if this was just a standard vanilla equity fund, it would have been figured out, and
we should point out,
blip on the radar.
State Street responded, and we didn't hear back from the SEC. I presume presumably everything is, and it's trading today. Presumably everything they're addressing their concerns.
Yep, it looks like it. It looks like they're going to file their responses publicly. There were some requests that it actually go through the avenues that allow the public and the investing public to read exactly their responses.
Edgar is the official filing on the website where you can see what they're saying, and not just personal correspondence on an email, for example.
That's right. So there'll probably be more transparency into exactly what's going on and clear up the confusion, help investors understand what's going on with that product.